This budget actually is somewhat forecasting, somewhat pre-plan. According to your capacity, according to your condition, or according to your nature, the budget instead also change. So I am going to discuss about some common characteristics or common style of budget. This budget will be same to same to you or may not. Okay, anything or any else. However, there are a very simple definition how is called a budget. The word budget derived from the old French budgety. French old budgety, that's been little bag. When the British Chancellor of the Exchequer make his annual financial statement, he is said to open his budget or replace the documents of account. So actually this budget at first established hence budgety, that's little bug, then British Chancellor Exchequer makes something about this budget related. From that, day by day, gradually I developed a budget style and budget condition and budget area. There are some common types of budget. At first, master budget. Master budget means is a summary of the budget. All budget you just ready. Then the heading of the all budget you list it in a budget. So this is the budget, master budget. Okay. So the summary of all budget is called the master budget. Okay. There is no specific style, there is no specific writing or item of master budget. Master budget is a combined all budget. When you try to all budget or summarize within a short place, this budget is called master budget. Cash budget, actually cash budget you cash related are designed here. How much cash generated in the accounting period, cash inflow or outflow. If inflow is more than the outflow, the surplus. If outflow is more than the inflow, that shortage or deficit of cash. You just try to make a balance. So this is the cash budget nature. Operational budget. Operational budget is one kind of short-time financial plan used to coordinate the activities related budget. And production budget, production related, how much product are produced in this year, next year, current year. You just take a plan about production related. Strategic budget actually as a finance budget, a long-term base. And this is the very crucial for a man or a organization. These types of budget to be selected. Zero-based budget. Zero-based budget, absolutely new budget. There is no any idea generated or gathered from the before or past year. Absolutely, you thinking the new on the basis your own view or own opinion. This is the zero-based budget. Static budget actually there is no flexibility, very rigid. There is no chance to change anything in emergency condition. Fixed budget, okay, no chance to change. And flexible budget is a sensible budget. Flexible budget depend on your decision, depend on your circumstance, depend on a situation, condition, sense, your thinking, your plan will be sense. So the sensible position is called a flexible budget. So there are some common types of budget I try to show here. Now I am going to another types of budget As a diagram, there are a sale budget. Actually, the sale budget we shows by a diagram as a categorically. Production budget and material budget, labor budget, manufacturing budget are combined cost of goods sold. Because when you try to produce a product before sale, different stages you try to cost incurred. Combined this cost called cost of goods sold. Then capital expenditure budget, cash budget, and budget income statement, budget the balance sheet. This is a collaboration or activities budget on the basis of the sales. Okay, production budget, and there are some rules or technique I try to highlight here how we try to prepare or schedule a production budget. The production budget is the prepared after the sale budget. Sale budget. After sale budget, you have to need to ready these types of budget. The production budget list the number of unit and must be produced the satisfy sales need and to provide for the desired ending inventory. Production need can be determined as follows. Production budget you can determine by the following. At first, budget unit sales, then plus these are ending inventory of finished good. Ending inventory you have to plus. Then you will get total need or requirement or available. Then you have to less the beginning inventory of goods. Then you will get a required production budget. This is a very common formula. So there are simple example. The production budget, that is simple. You just follow this formula and try to ready this statement by a production budget. Lexi Company Limited manufacture product A and product B during the year ending 31st December 2022. It expected that the product A sell 20,000 kgs, product B sell 80,000 kgs. To produce a product A and B, there are total requirement of material 23,000 kg A and 87,000 kg for B, respectively. Okay. In the year, there are product A and product B produce the production 80,000 kg A and B 81,000 kg, respectively. Find out the opening. Find out the opening and closing inventory of product A and product B. Just find out of opening inventory and closing inventory. Okay, so you have to follow this formula. At first, unit sale. There are sale unit A and B. A sell 20,000 kg and B sell 80,000 kg. Okay, sale. Then you have to find out ending inventory. Ending inventory are missing here. So you have to find out total need or requirement are available are mentioned here. Total need or requirement are available mentioned here. To produce product A and B, there are total requirement material 23,000 kg A and 87,000 kg for B. So this is the total requirement. So you have to minus from the cell A cell 20,000 kg, A total requirement 23 kg. So minus if you make a balance 3,000 kg, so ending inventory 3,000 kg for A and B will be 80,000 minus 78,000. So 7,000 kg. So ending inventory of A and B 3,000 and 7,000 kg. Okay. Then you will get, then you have to find out the opening inventory. How much opening inventory? So you already get total need or requirement and total production already mentioned here. Then you try to minus from total requirement to total production. Then you will get the ending inventory. This is the process. You just follow the formula. Then you will get easily find out the closing inventory and beginning inventory. Very simple. Okay, there are another option or another topics. Why and how do organization create budget? Budget are used to two distinct purpose: planning and control. Planning and control. After prepared budget or after complete the planning stage, automatically will start the control stage. This is the criteria of budget. Human factor in budget, definitely need a human to ready the budget, and human related item are involved in the budget. So without human, without budget. Okay. To ready the budget, there a lot of option may arise. That means tension, hostility, mistrust, and rather than cooperation and productivity, lots of issues are arise when you try to ready the budget. Another, how to prepare a master budget of your business. There are some techniques. Create the sale budget, create production budget, create material budget, create direct labor budget, create overhead budget, account for cost of goods sold budget, create administrative budget. All you try, you have to ready all budget, and then you list out or listing every budget a heading. Then you automatically will be the master budget. So master budget is the summary of all budget. Okay. To ready the master budget, you have to separately all budget you have to ready. Then you heading the individually budget. This budget will be the master budget. There are common formula, direct method, cash receipt, direct method or indirect method. You have to carefully follow the formula. How we ready the cash schedule. There are two methods of cash schedule, direct method and indirect method. Cash schedule means how much cash generated within a accounting period or within a specific period. That is depend on your organization. Cash inflow, if more than the cash outflow, this will be the cash surplus. If the cash outflow more than the inflow, that will be deficit by shortage of cash. This is the actual figure to find out the cash budget. And cash to ready the cash budget, we have to follow the cash schedule. And there are two ways to ready the cash schedule: number one direct and number two indirect. So here both are try to given by the slide: direct method of cash schedule and indirect method of cash schedule. There are a simple formula: cash balance beginning plus receipt total available, then less the disbursement, then you will get excess or deficiency. If the cash inflow more than the outflow, you will get the excess or surplus. If cash outflow are more than the inflow, you will get shortage or surplus. This is the cash schedule formula. Upper side cash schedule is in direct method, and below the slide cash schedule of indirect method. Okay. So this schedule you have to memorize. I think next chapter are very essential to solve the mathematical problems about cash schedule or cash budget related. So I think today we will mathematical problem solve the master budget. Already production budget I discussed before. Now I am going to some discuss about the master master budget. How to prepare the master budget for your business. So create a sales budget, create production budget, create material budget, create a direct labor budget, create an overhead budget, account for cost of goods sold, create a administrative budget. So separately, every types of budget you have to ready, then you summarize. This summarize of all budget is called a master budget. So master budget very easy. There is a simple math about the master budget. This mathematical problem we have to solve by a master budget. Okay. There are some items, different type of budget. You have to list it very shortly. Then you will get the master budget and its operation. So example number one, prepare the master budget for the glass company for next year. Glass sell glass A type for taka 3 lakh and glass type B for taka 5 lakh. Total 8 lakh. Okay, two types of glass try to sell. Then direct material cost 6% of sale, direct wages 20 worker at the rate of 150 per annum. Okay. Factory overhead, work manager 500 per month salary he gets. Store and spare 2.5% of sale. Depreciation of machinery taka 12,600. Light and power taka 5,000. Repairs and maintain taka 8,000. Other surplus 10% of direct wages. Administrative and selling expense 18,000. So there are sale budget, production budget, factory budget. There are mixed item here. Sales related item, direct manufacturing related items, administrative related items, factory related items. So different types of item. When you try to ready with the mixed item, combinedly this budget will be the master budget. So you have to first design sales related item. You have to design it first. So there are two types of glass and sales types glass A, sale types glass B, 3 lakh and 5 lakh, total 8 lakh. This is the sale budget. You just try to make a heading sales budget. Then you try to direct material, direct wages. Then you will get the prime cost. This is the uh, cost related budget, direct cost related budget. Then factor related cost, you have to identify factor related item. This is the factor related budget. Then there are administrative item. Then you have to separately writing the administrative expense. You will get the cost of production. So there are sales or cost of production. You just gradually try to find out the step by step the figure. So this is the master budget, and there are the solution of the problems. This is the solution. At first, the sale budget. The sale budget, selling price, glass type A 3 lakh, glass type B 5 lakh, total 8 lakh. Sale budget or heading. Then production budget and production related item here, direct cost. Materials 60% of total sale 48,000 and wages 36. This is a direct cost. So if you will get the prime cost 84. Direct related all cost combined you can call the prime cost. Prime cost 84,000. Then you have to factory overhead related budget, or that's mean work cost. Factory related cost means work cost. So you have to uh, classify factory related cost. Factory related cost, factory, work manager, store spare, depreciation of machinery, light and power, repair, maintenance, other sundress factory related cost. So total factory related cost 51,900. This is called the work cost. So you try to minus from total sale, you will get work cost. Then you will get a gross profit. and you try to admin and selling cost, then you will get expected net profit. So different types of item are available here. You have to just design or listing, then you have to try to balance. This is the example of master budget.